let me know later and I'll make sure we edit out your question. So we want to make sure this is as transparent of discussion as we can over this recorded session. So thanks again. And Chris Chagra, over to you. Please introduce yourself and kickstart the session.
Thank you so much, Chris. Let me start by first thanking you, which we don't do enough of. You're the reason why this community functions and exists. Chris started this in 2015. I was lucky enough to meet him on the same day, and we have been great friends since. And under Chris's leadership, a year later, we started investing. We were writing some angel checks, but we created an angel syndicate, which has 2,500 plus investors. We have written over 40 checks now. Then he ended up also creating Xoogler Fund, which has then invested in another 40 plus startups. And he's not done yet. He has been encouraging us to come together and figure out how do we embrace blockchain and Web3 and be more collaborative, open the process of governance and decentralization, and give more power back to the community. So you will hear some of those plans in the coming weeks and months, like how we potentially create our own DAO, our own token, and all the fun stuff that we have been talking about it over a while. And then, of course, we'll continue to support the ecosystem together as angel investors through the funds and becoming and bringing in more and more interesting people into the ecosystem to ensure that they, of course, embrace the community, they benefit from it, and as well as feel part of it. So I think after 12,000 plus members in Xoogler's, the community is all the more powerful, but we are not quite done yet. One more thing that I wanted to say before I introduce our guest today is how incredible this journey, particularly in the space of blockchain, has been, and my own career. For those of you who don't know me, I spent 8 years at Google, then 2 startups after that, and then then I had a career in academia as well as at another large corporation. And I still continue to learn. This is one of the most fascinating places. We invested, which is Chris and a few, and I'm sure many of you, we collectively invested in this small, tiny startup called FalconX a while ago. And through that relationship, I'm very proud employee of FalconX. I work at FalconX today and get to hang out with incredible people on the call. Ivan, who's a great colleague and kicks my ass at ping pong every day. And then through our extended family, we meet amazing people like Ronan and Tyler, who continue to help us in many ways. With that, I wanted to bring focus to the topic today. We're going to talk about what Acqui-hire is. What does it entail? And we couldn't have brought better people to break it down for all of us than Ivan and Ronan. I'm going to let our guests introduce themselves and take it from them. So Ivan, if we can start with you, that'll be great. And thank you for doing this.
Oh, my pleasure. And by the way, just for everyone here, Kush is sitting right next to me here in the room next door. I think we both decided to come to the office today. Very happy to be here. Thank you so much for the invite and the warm welcome. You guys are an impressive group of folks, and so appreciate the opportunity. Ivan Gali, I am head of corporate strategy at FalconX. I have been with FalconX for almost a year, which in cryptocurrency years, that's about 7 years or more. Things move fast in our world here. And I try to see my area, my role as trying to think ahead a bit, 6, 12, 18 months out at least. And also I look into corp dev, so M&A at FalconX. I'm going to do my intro backwards. So before FalconX, I was at another startup called Abra, which I joined in 2016. I spent 5 years there leading operations and finance. Took the company from pre-revenue, pre-product market fit, working out of a townhouse to growing profitable pre-Series C. So I felt was in capable hands and decided to join the rocket ship here at FalconX. Before that, I spent a couple of years at Yahoo when Xoogler was actually leading the company, Marissa Mayer. And before that, I spent about 10 years or so in management consulting at McKinsey, focused primarily on high-tech and telecom clients. And before that, it's almost too long ago, but I went to Harvard Business School, worked at Microsoft, Procter & Gamble, and I'm a computer engineer by formation. And in case you're wondering about my accent, I'm from Brazil originally. Fun fact, perhaps, maybe tragic. When I joined Microsoft, I joined 2 weeks literally before the burst of the bubble. So 2 weeks after I joined, it hit its all-time high stock price, and then it just went down from there. And I left Microsoft after 3 years, but it would have taken 16 years for my options to not be underwater anymore. So it's a long time for sure. So just if I could maybe just talk about FalconX for a moment as well. FalconX is one of the leaders in the digital asset space, focused on the institutional side. We're a Series C company at about $4 billion valuation. We're growing super fast. Today, we're about 150 people, and we're aiming to have about 400 people by end of year. And I think that's a bit of context in terms of Acquihires and why they're so important for FalconX. We see it as a critical driver for us to help in the talent acquisition process.
Thank you, Juan. Ronan, if I can ask you to introduce yourself as well.
Absolutely. So great to meet everybody, and I'm excited and honored to be here. So thank you to Kush and to Chris for inviting Tyler and I. So Tyler and I are with B Capital Group. We are proud investors in FalconX. We're also proud investors in several other companies that are across the globe. So about 2/3 of our companies are based in the US, and roughly 1/3 are based in Southeast Asia, India, and Oceania. So our firm, we're about 6 years old, and Tyler and I are 2 members of a 6-person, what we call capital formation and corporate development unit within B Capital Group. We work with our portfolio companies in kind of a shared services capacity, where a lot of times when we invest typically in a Series B, Series C company, growing very fast, and they have a lot of needs, but they don't quite have the need for a full-on corp dev office within their company. So Tyler and I, plus our colleagues, we lean in, we provide corp dev-ish services, and we try to help our portfolio companies build that muscle in-house so that they can be as strong and as potent out in the marketplace as we could be. So the 6 of us on the B Capital team, the capital formation team, we're mostly all ex-investment bankers with a little bit of private equity experience. Myself, I was an investment banker at JP Morgan for 2.5 years, and then at Goldman for about 4.5 years, before going to Microsoft's venture capital fund, where I did Microsoft's private equity and growth equity co-investing strategy. And then I moved over to B Capital about 2 years ago. And when I joined, we had about 500 million assets under management. Today, B Capital is over 5 billion assets under management. We have 124 portfolio companies and 110 people across the globe. We have a partnership with BCG, Boston Consulting Group, and we leverage our resources and our colleagues in BCG to help our portfolio companies post-investment on their value creation and continued growth capacity. So that's a little bit about us. Fun fact, since Yvonne mentioned the fun fact on his stock, his history of poor stock performance, but luckily now it's his histories of great stock performance. So my fun fact, my first job out of undergrad, I was an Army officer, and I served 5 years in the Army in Iraq. And so, not your typical analyst experience, but something that I hold in value to this very day. So a quick little something about me, and looking forward to having a discussion today. I hope this isn't a monologue or just Yvonne and I speaking with one another. We hope that we get a chance to speak with the group.
Thank you so much, Yvonne and Ronan. Let's kick this off. Like, my first question to you guys is, let's break down and help us understand what Acqui-hire is. How does it differ from an acquisition? Ronan, why don't we start with you?
Absolutely. So when we speak with our portfolio companies, when we talk about M&A, we talk about the three legs of a stool. And the three legs of an M&A stool are the equity purchase, the employment agreement, and what we call the intangibles. All right. The equity purchase is one company buying another company's equity, all of it. The employment agreement means how the employees come over and are retained when that acquisition is made. And then finally, the intangibles. These are things that you don't necessarily put a dollar value on, but are very important. These are things like culture fit. These are things like media campaign. These are items like titling and org structure, right? These are very important when a founder who is an entrepreneur and hasn't had a boss for a couple of years now is coming into a larger organization and has a boss. So those are the intangibles. Those are the three legs of the stool, and all three are typically in play during an M&A transaction, except for an acqui-hire. In an acqui-hire, the equity purchase is nearly zero value or even zero value. However, the retention, the employee retention and employment agreements are still incredibly valuable, and the intangibles are incredibly valuable. So in this context, what we're looking at for an acqui-hire means that very little value is placed on the equity, the assets, the IP, the revenue, almost no value is placed on that. The value is on the people, the team, and the culture. And those are the two legs of the stool that stand in an acqui-hire.
Thank you, Ronan. Yvonne, do you want to add something there?
Yeah, absolutely. I agree with everything that Ronan has explained. I would add that, of course, in the tech world, generally, talent acquisition is primarily focused on technical talent, right? But not only, we can discuss that later, but primarily engineering and product oriented. And I think in practical terms, I think there can be exceptions, but I would say a lot of acqui-hires end up being in the kind of smaller side of the spectrum, right? Compared to typical M&A, et cetera. So this would be younger companies, generally seed or pre-series A, with potentially up to only a few $1 million raised, and generally from, let's say, 2 to 20 employees or so. And I don't think that we have a lot of stats about this, but I wouldn't be actually surprised if most of the acquisitions in the world are acqui-hires, because just there's a lot more companies at that early stage, right? And this probably never gets really reported. And just one point of curiosity that I dug up from the internet, it seems that actually the first acqui-hire, or the first time it was coined an acqui-hire, was by Google. Was a company that in 2005 called Dodgeball.com was acquired by Google. So just coming full circle here.
That's amazing. I didn't know that. That's a great fact, and also hits close to home. Let's try to like shed light a little bit, and this is something that like as founders, our group is extremely interested in. We often hear stories about like how large companies literally fuel their headcount growth or their different staffing for different projects through acqui-hire. Being acquired as an acqui-hire is often celebrated in the same breath as an acquisition, but it's a different process. It's a different way of thinking about that journey. So Yvonne and Ronan, any of you can go first, but if you can help us like break down and think through what are the reasons why a founder and team will want to be acqui-hired? What are some of those triggers? And as you're explaining this towards the end of it, let's think through, can there be a decision-making process for founders when they start thinking about acqui-hire?
Want to go first?
Sure. I'll kick off. So one of the main reasons acqui-hires happen is because an entrepreneur had a great idea, they got capital, they built the product, and perhaps the product market fit wasn't there, or the business didn't scale, and so at some point the company runs out of money, and to provide a nice, comfortable, soft landing and respectable outcome for the employees and for the team, the board and the founder will look to be acqui-hired. That's one of the main reasons. I think another main reason is what we call these disruptive acqui-hires. So disruptive acqui-hires, when a large business, typically a larger business, sees skill sets that they need and they can't find, and they will pay up to to acquire those skill sets. And they'll not only pay up to acquire the skill sets, but the team and the group. So getting new skill sets is on the demand side. On the supply side, you have companies that are starting to taper down and they're struggling to raise capital, or perhaps they just don't have the product market fit that they thought that they would have. Once the product actually is built, the scale of it, scaling that product is a little a little more challenging. So they'll choose to look to return capital to their investors and move the team into a nice, safe environment for employees.
Thank you.
And adding to that, I would say, look, no founder starts the company thinking, hey, let me be acqui-hired, or assume most wouldn't. But I think over time, it has really turned into a tool that founders should have in their quiver, something that they should be able to resort to and have in their minds, especially because about 60% of the companies don't make it to Series A, right? So this is just dealing with the odds that you likely may end up in that situation where an acqui-hire will make sense. I think I've seen primarily very similar to what Ronan mentioned, two cases for why founders resorted to acqui-hires. The obvious one is ran out of cash, and so two to 3 months before they get out of runway, they start the process and they weren't able to raise and sell, etc. in other ways. But curiously, I've also found cases in which the companies had quite a bit of cash, like $3 million left in the bank with just a few employees. So they could have gone for a while more, for a couple of years actually, but they just didn't have it in them to continue. They weren't excited about a pivot, etc. So I think there are many different reasons why one might want an acqui-hire, but these are the two common ones. I think part of the process, that's a bit challenging and maybe frustrating, is that I don't think there is like a marketplace for acqui-hires. I think that actually might be a good idea for any of the founders here or entrepreneurs, is that these are generally small transactions that investment bankers don't want to be involved with, and there's peanuts in terms of dollars, right? So I think or founders end up resorting to their own investors like B Capital, and B Capital might be able to introduce them to another company in the portfolio, or to their network like the Xoogler network, for instance.
That's awesome. One thing I do want to point out is that Acqui-hire, particularly in like Silicon Valley, as someone who has been acquired and acqui-hired both, is celebrated. Like it doesn't mean it takes a lot of guts to start a company, right? It's easy writing a check, as when I see it from my investor vantage point. No disrespect to incredible VCs that are out there. They definitely fuel the economy that we go out to enjoy the fun part of being builders. But as in when you leave a large company, you're taking an incredible amount of large risk. And I think the way I have learned to think about Acqui-hire is that it's a win-win situation. Like you necessarily went to a startup. Yes, your idea, you didn't fully develop your idea. You didn't throw it out there. You didn't get the traction that you hoped for. But you picked up invaluable skills. You learned so many things that you would otherwise not learn while you were still employed. So I felt that a lot of people who leave soft cushion jobs at companies like Google and attempt a startup, they often become more well-rounded and better employees when they come back to another company than they originally were. So in my view, when I went through my second company that didn't win as much, and we were acqui-hired, the learning that I had in that second company, which I would characterize in my pride as a failure, were more tremendous than in a company that actually acquired and created value for investors and for the founders. So let's try to advance the conversation with that positive thought into the next thing. Suppose you as a founder has now made a decision that Acquihire makes sense. Ivan and Jonas, help us think through how they should think about structuring the deal. Are there different types of Acquihire deals that they can think through? Oh, and what are some of the best practices that they should be aware of?
Maybe I'll start. It's important to remember no two deals are the same, right? The motivations for exiting, the motivations by the acquirer, the culture fit, no two deals are the same. And in fact, the same team might be looking at 2 or maybe 3 different options to be acqui-hired into, and each of those scenarios is going to look very different. So there's really no formal playbook or framework because it is so different. But when I think about the 3 legs of the stool, and again, the equity purchase, the employment agreement, and the intangibles, I go back to those 3 legs every time. I kind of wandered a bit. I forgot what question I'm supposed to answer here, Kush. But maybe help refocus me on where you want me to take this. Sorry.
Yeah. So the question is that as a founder, now I've come to the conclusion that it's not worth moving forward with the original idea that I have in mind. Maybe I ran out of capital. Now I'm considering an acqui-hire. What are some of the best practices in terms of structuring the deal so that I land in a good spot?
Yeah. So the first practice is keep it quiet. Work with your board, right? You don't want to taint or leak to your employee base that something might be happening, because then you might be incentivizing those employees to flee and go find their own job, and you want to try to keep the team together and keep the value. So 1, keep it quiet. It also is very disruptive to any progress into your customers. The second thing is work with your board. The board can start to connect you with potential portfolio companies within their portfolio, as Ivan highlighted, and start to make introductions where culture fit might be present. And then finally, I say don't lead with a term sheet. Don't go out there looking for a term sheet first, because at the end of the day, the term sheet really isn't going to be the most important factor in your happiness or your longevity. Start with vision, start with culture. If you have a product that's similar to another company's product, start with a vision. And sell yourself and sell your team as being able to participate in that vision. Some of the most successful acqui-hires, actually, I think of one that Google did. Google acqui-hired a company out of Andreessen a couple years ago, and it was like a 0.4x. But the founders who sold into Google ended up becoming, I want to say, the head of Google Photos. So the talent and the culture and that entrepreneurial kind of drive that founders had to go start their business, that's often what's very valuable. And so to bring it back into another startup and to be able to have that energy and that culture, that's very important. So start with culture, start with vision, then move into the next layer. After you start with your vision, the next layer is, how do we do this? Let's do this together, and then start to introduce economics. Because you want to get the people, you want to get the counterparty excited about you and about what the vision is. So don't lead with a term sheet. And once you get a term sheet, I wouldn't go shopping it around either, because now you risk engendering bad will when you're trying to get someone who's going to be employing you, countering another party.
Yeah, I agree with that for sure. I think when we are having conversations as the acquirer, the first thing is really to have a conversation with the CEO, the founding team, and see if that culture fits there. And then after that, understanding a bit more in depth the skills and the quality of the team as well. Because after all, that's what you're going after, right? You're not going. I think the assumption here is there's no large revenue here, right? It's generally like no revenue or minimal revenue, and there's probably not much in terms of IP either, or customers that the acquirer might be interested in. So it's really about the team. So I think getting that figured out first is very important. And then when finally you get to the specifics of the deal, right? I think there's a few, maybe three different factors here that to think about. One is, okay, if the objective here is the team, so how many people are we going to be able to move over, right? So, and this goes back to, okay, what's really important to the founding team? Generally, when my first conversation with the CEO say, what's most important to you? If what's most important to the CEO is really having a great landing to the team, then we'll try to do our best to get as much of the team as possible. To give an example, in a recent deal, we were able to transition 9 out of the 10 folks at the company, and they all accepted the offer and joined us. So I think that's a very important point. The second point is whether to sell the entire entity, so sell the actual company, or just transfer the employees would be another dimension to consider here. I would say that transferring the employees, at least from an acquirer's standpoint, is optimal because it avoids due diligence. Because if you're an acquirer, the concern is, could I be getting some liabilities along with the company, right? And so it's going to basically require a lot of due diligence, legal fees, it's going to take longer. So I think the best practice for most acqui-hires is you sign some sort of LOI and the employees resign from the company and then join the acquirer immediately after. And that has worked out well for us as well. And the third element, I think, to consider here is something that Ronan alluded to, which is the equity portion. Look, I think for most acqui-hires, at least as an acquirer, our priority is to really take great care of the team that's coming over, right? So generally, our priority will be to make sure that there's a great payout to the team and the founders, more so than the investors. So that's very important also to figure out how that's balanced out. And there may be situations where it's going to be zero paid out to the investors, right? And so I think these are some of the three factors that generally we come across in these conversations.
Very well. Thank you for that perspective, Ivan. I'm seeing a lot of questions pop up in a chat, and I assure you, I'm going to ask one last question, then let's jump right into some live Q&A, as well as some of the questions that you guys already submitted when RSVPing for this. When I start thinking about an Acqui-hire situation, like the general perception, it is largely focused on engineering talent or product talent. What about non-engineering talent, like or team members, or how to think about team members that the hiring company may not want, and how some of these complex situations be dealt with? What's your advice as you work through some of the founders?
Yeah, so look, I think it goes back to that question that I usually ask the CEOs, what's most important to you, right? Again, in this deal where we got 9 out of the 10 people, we didn't get all engineers. We also got folks from legal, operations, etc., right? I think we have positions open across the company in BD, sales, legal, compliance, and what have you, right? In some cases, I think if it's very important for the founding team, and generally it is, to keep everyone together, I think we'll try to basically be creative and figure out ways of actually bringing everyone on board. I think in the situations where that's not possible for whatever reason, or the person is not a great fit, etc., then our advice to the CEO is generally to just give this person a generous severance package, but at least we'll try to get most of the team over to FalconX.
Thank you, Ivan. Ronan, anything you want to add there?
I would highlight everything that Ivan said. Especially a high growth company has headcount needs across the entire organization. So when a high growth company absorbs a low or no growth company that has lots of job functions, there's typically seats for all those people in the high growth company. If there's not seats immediately on day one, a lot of times by day 90, they've grown into that seat. The need has grown into that additional seat. And also for a lot of acqui-hires, they're pre-Series A, maybe Series A to Series B for the bulk of them. A lot of the admin functions still tend to be somewhat outsourced at that point, though fully recognize that there's still that there are a lot of in-house experts in those functions. But engineering, product, design, sales, these are all highly, highly sought after positions. And when you can bring a team that functions together as a team and knows each other, you can bring that full team and that unit into your business. That's what really kind of makes the magic happen in an acqui-hire. And keep in mind too, a lot of times in an acqui-hire, you're paying more than you could just pay for what you could hire somebody off the street. But the fact that you get a team that functions as a team on day one starts to justify that premium that you might have to pay off the street.
Thank you. With that, let's try to take a few live questions that were coming in, and then we can circle through some of the questions that were submitted. I of course have 10 things that I want to ask you guys and learn from. But thank you for walking us through describing what Acqui-hire is and the process. If you want to ask a question, please unmute yourself. Just quickly introduce yourself, your name, and the company that you're with, and your years at Google, and then go ahead and ask your question.
Hi, my name is Jason. I am a founder of a small regional services integrator specializing in Google Cloud. So the question I have is around, so as a founder who hasn't had much exposure to the M&A world, and as someone who is the founder of a very privately held company where we don't have a formal board or advisors who are heavily exposed to the M&A world, how can we start reasoning about the valuation conversation? And the context for this is we've been, in the past, we've been approached with offers that are, M&A in theory, but effectively amount to an acqui-hire with TEVs that are clearly trying to take advantage of lack of knowledge. So the real question is, how can a founder in that kind of position get educated quickly?
Yeah, so if it's a TEV with a lack of knowledge, then it might not truly be an acqui-hire because, in my opinion, an equity purchase really starts to not become that true acqui-hire. If you're purchasing the equity, there's probably something else going on there, especially if there's any sort of multiple of EBITDA or revenue. Unless it really is that strategic of a hire, you need these go engineers. They have to come on board. You have to have this. And before that company gets too big, let's just buy them. Let's do a stock for stock exchange, bring them in house and have them build it here. But for an SI, SIs typically trade on EBITDA. And so if you're out there in the marketplace and you're, if an EBITDA based business that trades about 2, 3, 4x of EBITDA is comparing themselves to someone who might be trading at 8 to 12x of rev. Just I think understanding your market, looking at the comps that you might have, and then looking at your revenue and your profits and how much you're going to bring to that acquiring business is how I would start. But there's just so many structures. And then for an acquisition, what's most important about the acqui-hire is the retention structure. And because you're bringing these people on, you don't want them to walk away after 90 days. You want them to grow, but you want them to grow in your organization and help your organization grow. So the retention structure has to be aligned and it has to be real. And so for a lot of times, you'll look at, okay, well, let me map what role you're doing now with where you could fit in my organization. And let me look at what you're getting paid now and what you might get paid in my organization. In some cases, there's a market adjustment up or down. And then you'll look at the RSUs that you could award, and you'll grant perhaps you'll grant RSUs at hire or at acquisition. You'll turn those out over 2, 3, 4 years, and you want to retain and motivate your employees to stay. So the value in that scenario is all in the RSUs and all in the employment agreements, and very little, if any, in the equity. So for an SI purchase, I would focus on, if you're considering it, focus on that employment agreement. If you don't think the TEU is important.
Echoing Ronan here, I think for Acquihires, it's a lot less about valuation in terms of revenue multiples or whatever it is, right? Oftentimes the companies being acqui-hired don't even have enough revenue, etc., right? They haven't gotten to that stage. They may be pre-revenue. So I think in Acquihires, the valuation is much more on the actual employees that are being transferred. And I think the way we think about it as an acquirer is making sure that they're getting great packages. And expanding on your point, Ronan, I think we think about for all of the employees, of course, they're going to get great salaries that are competitive with the market, probably much better than what they had at their seed series company, right? They're going to get likely stock options. And generally for Acquihires, we also look into the possibility of retention bonuses for the employees coming in. Now, the founders will probably get some special bonuses as well that may be related to, for instance, shutting down the previous company so they don't have the headache of dealing with that company, and also there may be earnouts around retention of the folks that are coming in and them actually joining, because the employees, even if you sign an LOI with the company being acqui-hired, you can't really force the employees to transition over, right? If they're resigning and being rehired. So I think those are elements that go into I think I saw a couple of questions around retention and earnouts.
I'll just state briefly the venture capitalist perspective here, right? So we're on the cap table of companies which are being wound down and are subject to acqui-hire. And our perspective is, look, we make our returns off of our top 10, top 20% of companies, but we make our reputation off of the rest. And so it's our reputation that's on the line, not our returns when we're doing a wind down. And so our perspective at B Capital is we want to take care of founders, because these founders, I think I saw on the chat stream, one of the founders that was acqui-hired at Google left and founded Foursquare. Well, how great for the investor that supported the acqui-hire process to then be given a chance to invest in his next idea, or his or her next idea, which was Foursquare, right? Those are great opportunities. So we firmly believe it at our firm, and I know it's common around Sandhill and around other VC firms, right? You're going to make your returns off of the FalconXs of the world and the great top performers, but it's the reputation that will get you the next chance to invest in that top performer.
Well, very well said, Ronan. Any other questions?
Hi, Anu here from Singapore, founder of 1B Stories. We're in the content space on a mission to do 1 billion stories in 5 years. I was at Google for the best part of the last 8.5 years before I started this last year. So my question is, where I'm actually in consideration of making an acqui-hire and never really done this before. Where we found a company that we are partnering with, and their team is really good, and they kind of have a very good complementary skill set technically and people-wise. And so we're trying to think if it makes sense. They're very small. They're trying to fundraise a next round and not really getting traction. I'm curious to understand, like, how do you go about valuations? I know we talked about the team and taking care of the team, but when a company is, let's say, running out of cash and looking to raise, they're obviously trying to maybe up their valuation based on progress they've made and things like that. Do you take that into any consideration? They also have, they've gone through accelerators and a couple of VCs there. So like those guys have interesting terms, especially with the accelerators. And so how do you kind of deal with those situations when it comes to figuring out a way to get the founders and the team across and potentially some of the product, but all the rest of it, personally to me, is very confusing.
So at some point, and I don't know too much about your situation, but footnote 1, every deal is different. And so please reference footnote 1 on this. But the fact here is that you want the founders, you want the team. There are other members of the cap table. There are probably board members and shareholders that may have to approve an offer. But if the company's facing a wind down, there's a little bit of distress that you can try to leverage. But in this case too, again, I don't know the situation. If it's worthwhile, you might do a partial share for share exchange where you want the founders to feel like they're also maybe potentially founders in your business if you believe that much in them. So you might even grant extra shares, or even if you really want to acquire the business, do a share for share acquisition. Don't use cash. And now those founders are partial owners of your business as well. So now you get into, okay, well, how many shares do I issue? What's the valuation spread? What's the exchange ratio? And that's all something that you really have to think about. And probably at your stage of a business, you might not have revenue to point to. It's more about relative ownership and potential and growth together. But then footnote 2, it's all about culture fit. And if you love the culture and you think that this team could be the team to help you get to the next level, even though the product isn't what you want, there's no revenue, but that's the team, that culture fit's going to feed a lot into your valuation formula.
Got it. Just a small follow-up, like how much does the money that's already gone into the company become a factor? Because, people have raised a bunch of cash, and so you have a valuation and there's cash in, but, you could just analyze it based on what's there, or you analyze it based on what's gone in.
I'd say near zero. And I think
okay.
Ivan has an actual story to tell you about that. But the fact is, like, the founders aren't going to participate in anything if it's underwater, right? Because the pref stack is going to go to the VC investors, right? The
Correct.
last in, first out. And so the founders are going to walk away with nothing. You're not in it for those investors. Those investors know that they're rolling the dice, right? You have investors rolling the dice on you. Many people on this call have rolled the dice on companies that worked out great, others that didn't work out. So there's no reason for you to subsidize their roll of the dice. It's about the people, and maybe I'll turn to Ivan to tell his story about how much money really matters at the end of the day.
Right. Look, I think one of the first things that I try to learn from the CEO also in that first conversation is what is the governance process at the company? If who's on the board, and do investors have blocking rights, etc. Right? So basically, if the founding team decides to sell, can the investors block that? Because look, to be honest, in this moment of the startup is one of the few moments in which the incentives of the investors may not be the same as the incentives of the founders and the employees, right? So at that point in the process, the investors say, hey, I want my cash back, right? Whatever money I put in. I don't want to have a write-off on my books. I want this to look good, right? But the founders are basically saying, hey, I want my team to land well. I want myself to land well. And us as an acquirer, of course, we have zero incentive to pay the investors and all the incentive to take care of the team. And so I think hopefully you have a great VC, or they have a great VC like B Capital here, who says, oh, sure, go for it. And I don't need to see my cash back because I'm betting on the top 10% of my portfolio. But maybe they won't, right? But I would really push to balance the equation in a way that 99% or 100% of the incentives are going to the team that's joining you.
Thank you. Anyone else? Going once. Oh, there you go.
Calling from New York. I was at Google from 2015 to 2019, founding a startup in the fintech space around need-based discounting. Also, I was just curious, you mentioned this in brief, getting a whole working unit as opposed to individual employees, but for a potential acqui-hire or acquire, why don't they seek out individual employees and give them like just substantial better offers and rather than buying a whole company? Like, what goes into that trade-off? It seems like, yeah, it'd be more straightforward.
Coach.
Yeah, the way I see this is like wholesale versus retail, right? As an acquirer, I can go and try to negotiate with all of these 10 different employees and get them, and maybe I'll be successful with, I don't know, 60% of them. But as soon as I start that, maybe the other 40% are going to go elsewhere. And so I think that's one element where if you do this in a more coordinated way, I think as an acquirer, you'll likely get more of the team. I think there is an element of reputation here as well. Should just not be very too aggressive, right? And kind of taint your name as an acquirer in terms of going behind the founder's back and trying to poach those folks. Ron, I don't know if any other considerations on your side.
No, I mean, we had the term at Goldman, be long-term greedy. And that's definitely, you know, don't sacrifice one deal. Don't sacrifice your long-term wealth or gains for one deal. And you can definitely do the poach and get your employees that you want, but you're not going to get the reputation that you want, which is being a benevolent acquirer. And then you're going to get the draw. Everyone knows if you want to be acqui-hired, go see FalconX. They take care of their people. They take care of the target, you know, the counterparties. They bring you in. They integrate you like your family. That's the reputation you want, especially if you have a growth path where acqui-hire is part of your strategy for 3, 5, 10 years. Be the benevolent acquirer and create, you know, create that family effect that you want. And I see that employees covered by an NDA. You know, in California, I mean, yeah, employees are covered by an NDA, but in California, right to work, free will.
Yeah.
Hard to enforce.
Yeah, it's at will employment in California. So anyone is free to work anywhere at any given point of time. An employer can't lock you in a contract, which is long-term. And an employee has the same right as that of an employer. Anytime the employment can be terminated, or at will separation can be processed. We can take one last question. I do want to ensure we give a little bit of time to Ivan and Ronan to talk about, of course, Ivan, it'll be great for you to talk about like FalconX, and if people on this call or in the wider Xoogler community are interested in talking to you or are at a stage where they're considering or thinking through Acquihire, how can they reach out to you? And Ronan will, like, of course, like, we love to foster a deeper relationship with BCAP. You guys have been extremely kind. I've seen that in person, the amount of time and generous resources that you provide FalconX. So I'll highly recommend talking to BCAP. We'll love to hear from you towards the end as well. But before we get there, we can take one more question, guys. I think then we'll run out of time. Anyone has a question here? All right, Danny, why don't you ask your question that you typed? You can speak.
Yeah, happy to. I'm just curious if you guys have any like ballpark numbers that might like kind of compare it to exits for me, of just like what companies are acqui-hired for, like per employee, or just any ballpark guidelines to kind of anchor this conversation.
Yeah, I'd stay away from it. I know if you Google this, you'll see headlines and you'll see people say it's $1 million per engineer, and you know that might be true, but that's not actually what the equity is being purchased for, right? $1 million per engineer might be 3 years carrying costs of salary plus RSUs plus benefits plus bonus, and so that might be the math that those headlines are showing. And so that's the way I would think about it, is what's what are you paying? What are you hiring for? What's the entire package, including a salary, and then what the retention bonus is. And if you put all that together, it's going to vary greatly based off the skill sets that you want, the talent. One of the things we didn't really talk about is how do you assess talent? You want to acquire somebody. They say that they're great, coders, but how do you validate that? And so how do you do that in a way that's also respectful and doesn't ruin the process and the speed of execution, which is also very important. So pay, think about that, right? So if it's a 3-year hold or a 4-year hold, maybe $1 million per engineer isn't enough. If it's a super talented person who you think could become your next chief product officer that you're looking to hire anyways, it might be a little more. But a rule of thumb is not the is not that $1 million. I would say it's, you got to custom it, customize it.
Yeah, I've always been confused by that $1 million number that you see online. And one thing that you should think that how the acquirer will think is the math that we're going to do, because there's also an economic side of this that we have to consider, is how much would it cost me to go acquire someone like this in the market? And then think about kind of recruiting fees, right? Which might be certainly not anywhere close to $1 million. With $1 million, you can probably hire 10 engineers or more, right? No, not for salary, right? But in terms of the actual fees themselves. So don't expect that someone will pay in equity $1 million per engineer, or I think something like that. At least I don't see the logic of that.
Completely agree. I think it's largely a very catchable, clickbaity kind of headlines that you will see on the internet. The best way, like when I went through the own Acqui-hire process, the way someone else explained was, think about the salary that you would be getting. And now that you have these unique skills and you're coming across a package, you might be able to get a little bit more in terms of, because the company wants you, they're going to add retention, they're going to add some special clauses in your contract, but largely it's going to be structured as an employment contract. So having realized that, yes, if you want to spin out a story, which is a great concept, the one thing which Acqui-hire does give you is this soft benefit of going to media and saying that my company got acquired, which a lot of founders prefer. I certainly will prefer that if I'm founding a company and being Acqui-hired. And yes, totally, you should capture that. But then if we start adding up that, hey, I have say 10 employees and roughly in this employment contract construction, each employee is roughly going to make, say, $3 million over a course of 4 years. So it's $30 million total acquisition value. That makes no sense. That's just a clickbaity headline. It's just basically what you will make as an employee. But one additional consideration that I do want to tell you is, if you're considering Acqui-hire, join a company where you're not only going to get a meaningful exit, where you will want to work, but also which is on its own rocket ship course. And one such company, proud to say, is FalconX. So Ivan, I'm going to let you talk a little bit about it. And then Ronan, if you can tell us a little bit more about BCAP, which stages you invest in, and what's the best way to get in touch with you guys, that'll be perfect.
Thanks so shameless plug here, FalconX. And by the way, Adam here on the comments said that he's a substantial customer of FalconX, and we're indeed great. Thank you to Adam. And we are one of the leaders in the institutional digital asset space. The company is about 3 years old. Lots of Xooglers, by the way. Our CEO and founder, Raghu, has been here with the Xoogler network, and he actually worked on the Chromebooks directly with Sundar there, and we have other Xooglers as well. We're in an exciting, cutting-edge space. We have a great team, great talent, but as I mentioned, we're probably adding 250 people this year alone to the team, globally, but certainly a lot in the US, in India, in other locations as well. So if you are interested for your own company in potential acqui-hire, or you know anyone, any startup that might be, please reach out to me. I put my email address here on the comment is my first name @falconx.io. Yeah, and looking forward to taking this conversation offline with any of you.
Perfect. And Ronan, I have to ask you, since Chris asked me, why did BCAP decide to invest in FalconX?
Oh man, we wish we invested more when we first invested. We were learning. So the funny story, we were still learning. I make the joke now. I just learned how to spell NFT. So I am behind the curve on crypto and digital assets, admittedly. And our first investment into the crypto space was a very small, what we called an exploratory check into FalconX to help us learn, to force us to do the diligence. And that was in the Series B round. And we've just had such a great time working with you, Kush, with Ivan, with Raghu, with the team. Great talent, great people, amazing energy. And we're proud to bring you to market to have conversations with some incredible institutions, or to bounce ideas off of you guys. So we're thrilled and we're very proud. Now, B Capital overall, that we invest in the Series B, and that's typically when we invest. So we'll usually invest $15, $25, $40 million in a Series B to D round. That's our bread and butter. We do have an early stage vehicle, which is seed and Series A. Those are smaller checks, 500K, 1.5 million-ish, that come in early in the life cycle. And it's a separate and distinct strategy from our core strategy, which is that Series B through D investing. We like to stay with companies and double down and concentrate into positions over $100 million over the lifespan of our relationship with the company. And to do that, we also have a continuation vehicle, which allows us access into late stage investments and then also pre-IPO businesses. So feel free to reach out to me. I'll put Tyler my email in here. We are a global firm, so if you're in Singapore, we have a Singapore office. If you are in New Zealand or Australia, I'm looking for a reason to go out there. But we're very active in the globe, and we believe talent is equally distributed, and technology is a global phenomenon. It is not a US phenomenon. It is not a Europe phenomenon. It is global. So one of our big value adds is investing in a company and helping them achieve that global scale. And that's one of the things we're working with Kush and Ivan and the team on right now is global expansion. We love it.
Fantastic. You guys have been nothing but great to us, and thank you so much for your continued belief and support. One thing I do have to call out about BCAP is, like, we not only get access to Ronan, but through Ronan, we also get access to strategic advice when we need it, and he enables the entire weight of BCG behind us to get like strategic consulting advice, and whenever we need it, we can also tap into their advisory network, which has been tremendous from time to time when we do need to seek expert counsel. So thank you for that. With that, I'm going to close. Thank you, Juan. Thank you, Ronan, for an amazing discussion. Thank you, everyone, for asking so many questions. I don't think we got to every single one of them, but I'll be sure to ensure that I collect additional data points and report back to you about this. We'll sync back with Juan and Ronan and post this online in a couple of days. And if there are any questions about Acqui-hire, please feel free to reach out to both of them. They have been very generous to share their email. And then finally, like, if you're considering Acqui-hire, I think please write to me and Ivan, and we'll be happy to talk to you and help you see through the process. And if we are a mutual fit, that's tremendous. Have a great evening, everyone. Bye-bye, and a good morning to people in Asia. Bye.
Thank you. Bye.
Thanks, everyone. Thank you, Kush, for moderating it, Ivan and Ronan for speaking and sharing everything. Even if you don't want to be acqui-hired by FalconX, I'm sure they will also be able to advise you. It may not be the right fit for FalconX, but as part of the community, they'll be happy to share their knowledge. So the emails are there. Again, thanks for our speakers devoting this hour to us. And thank you, everyone. Good luck with your startup. And feel free to reach out if you need any more advice and help on this. Bye, everyone.
Thank you. Bye for now.